Ford is the only American car manufacturer to never go bankrupt besides Tesla, and recently their CEO has been making aggressive moves into new areas such as 3D printing, autonomous driving, and electric cars. In this video, I'm going to be covering two parts of Ford's turnaround story: their leadership change and company overhaul, and their new investment in emerging technologies, including autonomous driving and electric cars. And we'll also talk about how all of these changes position them relative to their competitors such as GM and Tesla. So if you want, you can hit the like button and let's dive right in. So to start out, we need to understand a little bit about how Ford has been performing over the past few decades. And the answer is not great. Just looking at the stock price from 2000 through 2010, the stock price had a dramatic drop off from $80 at the start of the decade to just $10 in 2010. They did slightly better in the 2010s, and by slightly better, I mean they lost a little bit less value, going from $10 at the start of the decade to $4 in March of 2020. So how did the world's first major car manufacturer, which has over 100 years of experience, get into this situation? Well, there are several factors, but I think the largest one is competition. Car manufacturers face extremely intense competition because they're essentially commodities. It's very hard to differentiate one car from another. If GM releases a new truck that matches the performance of the latest Ford, but it's $1,000 cheaper, people are going to go buy the $1,000 cheaper truck because they don't really care which company makes it. This means that Ford has to in turn drop its price to match the price offered by their competitor. Over time, this slowly drains all the profits out of the industry until everybody's basically selling their cars at the same price. In this almost fully commoditized market, much of Ford's profitability actually comes from selling replacement parts to their vehicles. They might make less than 10% margin on selling their actual cars, but then they might make 40% margin on selling small replacement parts for that vehicle when it needs servicing. This model becomes even more problematic when the economy takes a downturn like it did in 2008 or at the beginning of 2020. In fact, at the end of 2020, Ford's leadership called out the economic conditions of the year as one of the biggest problems with the company's performance over the past 12 months. Which makes sense. If most people are working from home, they probably won't be driving as much, and even if they are, they probably won't be buying new cars when there's economic uncertainty. So this intense competition, along with a general lack of innovation from Ford, has resulted in the company's stock price basically just floating up and down along with other car manufacturers like GM or Volkswagen. Something that is very clear just by looking at the stock prices of those three companies over the past 5 years. Compare this to the stocks of other car manufacturers like Toyota or Tesla, which have done extremely well over the past 5 years. But now we're leaving all that behind and moving into a new decade for Ford, the 2020s. And with that new decade comes some pretty major changes with the company. The first big change is that the company brought on a new CEO in October of 2020. Now this new CEO is still just a car executive. He was previously the CEO of Ford Europe. We'll have to wait and see if he is able to push the company into the 21st century in a more meaningful way. We have started to see the stock price rise in 2021, but this seems to be primarily due to macroeconomic conditions, which are also affecting their competitors like GM and Volkswagen in about the same way. In addition to this improved economic outlook, Ford is also making aggressive moves into preparing for the future of cars. Now, to be totally clear, I don't know anything about investing in traditional car manufacturers, but I do see three major trends that Ford is going to benefit from hugely over the next several years. The first is Ford's investment in Desktop Metal, a 3D printing company. This company has support from famous investors such as Chamath Palihapitiya, who founded Social Capital, which is an investment firm focused on future growth opportunities. This company has the potential to 3D print automotive and aerospace parts that normally you would have had to manufacture using traditional processes. This could allow you to produce the parts more quickly, cheaper, or even produce shapes that might not even be possible using traditional methods. If this technology can scale effectively, it could give Ford a huge advantage over all other car manufacturers who don't have this technology applied to their production lines. Desktop Metal claims that they can 3D print both metal and carbon fiber at any scale, which presumably would also include Ford's huge scale necessary to produce all their cars. In January of this year, Ford purchased a production system P1 from Desktop Metal, making Ford one of the first users of this new technology. This company is actually using a new 3D printing method which hasn't been used before, and so it hasn't really been tested on production scales like Ford is going to be applying it to. Now this could present some risks to Ford if this technology doesn't really work out, but on the flip side, Ford is willing to place a big bet on this, and if it pays off, Ford could be miles ahead of other car manufacturers in terms of the efficiency of their production process. The next area of focus for Ford is AI. Now most of what I've heard about AI with regards to cars comes from Tesla and their autonomous driving technology, and it looks like Ford is trying to take a similar approach. Ford previously had a separate segment of their business called the mobility segment, which focused on autonomous driving and related businesses and included their investment in a company called called Argo AI, which was an autonomous driving company. Well, for the first time starting in 2021, Ford's mobility segment was moved into its automotive segment for reporting, indicating the fact that this is moving from kind of a moonshot project that Ford was investing in on the side into an actual technology that they can produce revenue off of. Now, it's a bit early to say how well this investment is going to pay off, especially compared to manufacturers like Tesla, which already have a lot of experience in autonomous driving, or even competitors like GM, whose Cruise has driven over 2 million miles over the past 5 years and has invested billions of dollars into solving the autonomous driving problem. This whole area of autonomous driving is definitely being set up for some serious competition over the next decade. You have Tesla, who we already know a lot about their autonomous driving, but you also have Google's Waymo, you have Argo AI, which is supported by both Ford and Volkswagen, you have GM's Cruise, and now you even have Apple potentially entering the fray with their Project Titan that they've been working on since 2014. Now, Ford may not win out in the long run, but it is good to see in the short term that they are entering the competition in a serious way. That leaves one more area of future focus for Ford, and that's electric vehicles. Anyone who's interested in cars or the car space has probably seen Ford's new Mach E. This is their new Mustang SUV, which leverages the power of electric cars. It comes in at a base price of around $5,000 more than Tesla's Model 3, with a slightly lower max high-end range of 300 miles and a 0 to 60 speed of 3.5 seconds on the performance model. However, unlike the Model 3, this is an SUV, so perhaps a better comparison would be to Tesla's Model Y. The Model Y still comes in at a cheaper price than Ford's Mach E at a price of only $40,000, and it also has a slightly longer max range of 326 miles. Aside from that though, the Mach E is actually very similar to the Model Y. They even modeled the interior it looks like off of Tesla's, replacing the center console with a single touchscreen. Now, I don't know a huge amount about cars, so I can't really compare how the quality of Ford is going to compare to Tesla, but it will be interesting to see how well this new Ford holds up over several years. We know that when Teslas release new models, there usually are a few build issues initially, but those are slowly worked out over time, plus the Teslas are improved by over-the-air software updates. Mach E is supposed to have similar software updates, with one expected for later 2021, which is going to enable hands-free driving in the vehicle. While this car is just one step toward electric vehicles for Ford, it seems like a step in the right direction where the rest of the world is going to be headed for all electric vehicles. Ford also announced that they would be investing $29 billion in electric vehicles through 2025, an amount greater than the entire valuation of the company back in March 2020. Additionally, they have announced that electrification is coming to their existing models of cars, with an all-electric F-150 slated to come out in 2022. This would move electric vehicles from just the realm of high-end performance models like a Mustang and into everyday work cars that normal people might buy for everyday use. But no matter how good the car is, one of the big advantages that Tesla has had over other car manufacturers that are trying to move into electric vehicles is their supercharger network. Well, Ford recognizes this, and they're addressing it with their Ford Pass charging network, which they say represents the largest public charging network in North America. This network is actually built by Electrify America, which is a separate company that produces electric charging stations which can be used by multiple car companies. Ford Pass is just an app that you can get for Ford, which allows you to pay for all these different charging stations, and it gives you access to all those stations if you're driving an electric Ford. In total, they have over 13,000 charging stations across the United States, which is actually more than Tesla's superchargers in the country, which only has 10,000 stations. That being said, this is only for North America, and it falls behind Tesla's influence in Europe as well as parts of Asia. Additionally, Ford is partnering with Amazon Home Services to allow them to install chargers into people's own homes. Again, outsourcing a big part of the work of actually supplying electric access for people with their cars. So between the access to this Electrify America charging network, as well as the ability to install 240-volt outlets in people's garages, Ford is confident that they can address the electric charging needs of their customers. So Ford is clearly taking steps in the next direction, investing in improving the efficiency of their production process, developing autonomous driving, and creating electric cars. The real question then is, can Ford compete with the other car companies? I mentioned at the beginning of the video, and Ford also mentions this in their 10K report, that Ford's real issue is that they're a commodity company who really struggles to differentiate their products from any other car manufacturer's products. The question is, as these other car manufacturers are also investing into these new areas, including autonomous driving and electric vehicles, will Ford going forward be able to differentiate itself from the GMs and the Volkswagens of the world? Not to mention from the Teslas, the Googles, and the Apples of the world who are also moving into this space. We'll really have to wait and see how this all turns out, but Ford is definitely going to be an interesting stock to watch over the next decade. But Let me know what you think of Ford's new direction. Don't forget to like and subscribe if you enjoyed the video, and I'll see you next time.